everyone. If you're joining us, my name's Kylie Davis. I'm President and Founder of Proptech Australia, formerly Proptech Association Australia, and you'll probably hear me saying the Proptech and then stopping myself during this conversation. Just to kick off, an acknowledgement of country. I'm here today on the lands of the Turrbal and Jagera peoples. I'm actually in Brisbane today. And before I begin, in the spirit of reconciliation, Proptech Australia acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We are an industry that understands the importance of place. We pay our respect to their elders, past, present and emerging, and extend that respect to all Aboriginal and Torres Strait Islander peoples joining us today. And I'd especially like to thank the fabulous support of Stone and Chalk, who make all of our Proptech panels possible. If you don't know Stone and Chalk, it was founded as a not-for-profit in Sydney in 2015 to help fintech startups commercialise and grow. And from 40 startups in 2015, it now has well over 200 startups in Sydney, Melbourne and Adelaide, covering all areas of emerging technology, including PropTech, of course. And they now, there's about 20 plus PropTechs that call Stone and Chalk home. And in the last year, they've moved away from Wynyard up to the brand new fabulous tech building in Pitt Street. So if you are in the area in Sydney for the day and need a spot to prop while you do some meetings or base yourself, do check it out. They've got a fabulous open general area. Now, let's kick off. The PropTech landscape is evolving at the moment at breathtaking space, and that is going to continue in 2026. And it's presenting both sophisticated hurdles and unprecedented opportunities, both for ourselves as technology businesses and for the real estate and property industries that we're serving. We have economic shifts, we have new governance obligations, we have the ever-present tech breakthroughs, especially, of course, in the field of AI, and it is going to be an action-packed year. So who better to help us unpack this in the residential space? And just a short pause there while I say we will be looking at the commercial impacts in a couple of months. But in the residential space today, we have some of our newly appointed board members for Proptech Australia, Josh Callaghan from Little Hinges. G'day, Josh.
G'day, great to be here.
Fabulous to have you. Sev Thompson from Domain. Welcome, Sev. Or do we say Domain Coaster, or are we okay to just say Domain?
The Domain brand's strong, so you can keep using Domain, but now part of the CoStar group. Thanks, Kylie. Great to be here.
No, great. And Matthew Larwood, part of from Stratasaurus in Adelaide. G'day, Matt.
G'day, Kylie. How are you? Good to see you.
It is great to have you all here. What I wanted to do was just sort of kick off a little bit with what you saw were some of the highlights of 2025, or what changed, what rocked your world the most in 2025 before we start to get into the 2026 leads. Who would like to go first? Go, Matt.
I'll go first. Well, we had a pre-chat on this one, and there was a fair amount of alignment amongst the panellists, so I thought I'd get in first and make it sound like I had something new to add and interesting. So we're seeing in 2025. So the question was, what did we see in 2025?
Yeah, 25. Yep.
Yeah, I think a continued growing awareness of the not only the role of technology in the strata space, but also how far behind we are compared to other industries. As I mentioned before, our company, not our product, but our company was called Stratasaurus when we came into the industry. Only around 10 years ago, we were very surprised by what we saw, and there's still a fair bit of that. It's a slow churn, things are evolving slowly, and we did see some green shoots with regards to people's realisation and understanding of what's possible now as opposed to what they've been told.
Yeah, I think that's a great comment too. That we are an industry of different segments and subsegments, right? And not everybody is moving at the same pace. And we have examples of, and I think the residential PropTech sector is really interesting because the sales and property management side have moved into technology a lot earlier than other parts of the industry, like Strata and even parts of commercial. Josh, what are you seeing? What did you see?
25 was pretty big news in our area in particular, because obviously working in, digital virtual tours and creation of content, we had CoStar bought Matterport, which, although effectively was 24, did settle in 25, then followed by their acquisition of Domain, which definitely shifted sands there, and then REA's acquisition of iGuide as another capture technology that is trying to be pushed into the space. So that is that changed a lot of the sand in our area, and will no doubt spur on, I guess, the next tranche of innovations and opportunities, because once something like virtual inspections becomes ubiquitous across listings, which it's almost inevitable to come in the next 12 to 24 months, that builds an entire ecosystem of innovative opportunities and new proptechs. But they were the big shifting sands in 25 that I think will reverberate in the next couple of years.
And there's a few interesting things in that, isn't there? Because virtual has been around for, what,
Eons.
15 years?
10, 15 years. Yeah,
I'm thinking
absolutely.
about the first time I saw it at Inman, back in my CoreLogic days. So
yeah, that's right.
And we're seeing that lag, aren't we, from experimental tech being sort of that, and QR codes. God, how long did they take to come on board? Yeah. And then suddenly everyone was using them. So what at the moment is the uptake of virtual?
Yeah, it's still on platform. It's still, it's still in that single percentage, like 5-6%, of listings will have a virtual tour. Typically, I think in most adoption curves, of technology, once it gets beyond that 10 to 15%, it then enters into the mass market and becomes ubiquitous. We've seen it in so many other pieces of content, though. You go back 15 years and most listings on realestate.com for sales didn't have a floor plan, and now it's just absolute bare minimum. Same as professional photography. We used to get 3 professional photos done for the weekend newspaper, and then when portals first came online, they're just uploading all sorts of random point and shoot photos. And then over time that became, now I need 15 highly polished, professional, staged, angled photos. And that became ubiquitous. Virtual tours, consumers love it. They scream for it. And so it's sort of the natural next, ubiquitous content piece that is now finally being pushed by the big boys as well.
So let's go to one of those big boys. Sev, there you go.
Thanks, Carly. It's the first time I've been accused of that.
How's that for a segue? So 2025 was a very big year for you guys at Domain. What did you see were the big things that impacted you, including your CoStar purchase, I'm assuming?
Yeah, great question, Kylie. And that's probably the place to start, because it's a game changer for Domain and what we're able to do in the Australian property market. So 2025, we're now part of the CoStar group. So that transaction completed at the end of August last year. And 6 months later, we're already seeing a lot of change and a combined roadmap in terms of taking a lot of the technology that CoStar has globally and then getting ready to deploy that in Australia. So one of the key aspects that Josh mentioned, just building on it, is virtual inspections. And CoStar's got Matterport, which is the leading product in the space. I'd encourage everyone on this call today, if you haven't already, jump online, have a look at it. The technology is absolutely stunning. So virtual inspection technology has been around for a while, but like any technology, it's evolved. And right now it's at the point where it's amazing, and it becomes important for so many things. When people buy a home or a property, it's often the biggest investment decision of their lives. But the amount of time they spend researching that property or actually walking through it, seeing what the living room's like, thinking about what they can change, what they could renovate, having a look for any issues around the house. You've got these 30-minute windows of inspection time you've got to be in or out. And most people I know spend more time, browsing and doing their diligence on the next TV purchase than they do on their house, just because we're allocated these 30-minute windows. So virtual inspections are going to be an absolute game changer. One of the reasons is because you actually get to spend enough time looking around the property. Everyone jumps very, very much straight to you can check out many more properties from the comfort of your living room, and that is true. But also, the level of diligence, thinking through renovation plans, it's impressive in terms of what Matterport can do in terms of starting to help you think through those possibilities. That's going to be an absolute game changer. Josh said something interesting in terms of the adoption rates, and it's true that these solutions adopt very quickly. Property is also very hyper geographical, so we don't even have to drive adoption on Australia in aggregate. What often happens is you'll have Sydney, Melbourne, Brisbane, or some of these, they're seen as leading markets around the country, where in some of those sub-segments of those markets, you'll get quicker adoption of these technologies, because as soon as in a smaller geographical area, like a few suburbs where people are searching for a home, as soon as they see virtual inspections on some of the properties, all the others very quickly follow. And so that's why I think, building on Josh's view, the acceleration curve for adoption is going to be very steep. So for us, it was becoming part of the CoStar group, and I can talk about that more in terms of what that means for us later on, if that's helpful as well, Kylie. But also some of the other technology that we're deploying, and you can see some of Domain's future roadmap by looking at what CoStar are building out with Homes.com in the US. So, for example, another showcase solution is interactive voice search and property walkthroughs on Homes.com. And you get a sense for what it's like searching for properties just using your voice rather than typing in queries. So there's quite a lot of technology that started in 25 that's going to be a game changer for the future.
Cool. Okay. It does sound very exciting. And look, for full disclosure, Mark and I are selling our place in Sydney, and we are using Little Hinges. We've done a virtual walkthrough. Hilarious feedback from my husband when we first saw the walkthrough, which was, oh crap, do we need to fix the concrete outside the front of the gate? Because it was so detailed, he could see that there was a crack in the pavement. So no, look, that's council's job. That's not impact the value. But that the extraordinary detail was phenomenal. Anyway, look, a lot of this is, there's huge amounts of computing power in this, in all of these things, and I guess that's one of the big trends that we're seeing in 2026, just how much extra grunt is out there for some of the AI and big chewing through this data that we're doing. Josh, what are you seeing in terms of what are the three things that you're seeing for 2026 that you think are going to impact us the most?
I think one of the biggest trends in 26 will be an acceleration or the continuation of the sharing of data and new data points. There's so much rich data out there in the world, in the property world, that is, that's completely unseen at the moment. A good example is, our internal property data set that allows you to, get condition features and detail basically every component piece of a property in the internals, which is completely unseen at the moment. I think that's what, when we talk about hyper personalization or voice related search or moving beyond, or even AI search, agentic AI and that sort of thing. The problem is it's always going to be limited by what the data is. And if you can only see lot size and a few standard data points from, misguided photos or inaccurate floor plans, it's not going to be enough to actually create the hyper-personalized experiences that people expect. And so I think we'll see a huge spike in that and the availability of that. And AML helps that a little bit, because then all of a sudden, there is a framework and rails for customer data and all that sort of stuff to be, properly dealt with within the industry. The second thing is hyper-personalization. I think, but all the portals and anyone in the direct-to-consumer space is under threat of AI. It's too early to pick a winner, but it's clear that it's a significant threat. And if that space doesn't accelerate quickly with hyper-personalization and giving people exactly what they want when they want, and not having to be, we're going through the process of looking at houses at the moment. I'm effectively a manual house flicker. I can set my faceted searches as, with whatever's available there, if I even believe that, what's been input is accurate. And then, but then I'm still delivered, 5 new listings a day or whatever that I have to manually go through. And I'm applying, a level of quantifiable assessment to that, but it can't be captured or matched up or anything because the data doesn't exist. So hyper personalization will definitely be a big race this year. And then the last one, I should probably have to go to my notes. The last one we've already spoken about, virtual tour penetration. I think when you've heard Sev, talk about how excited they are internally about Matterport and what that does to transform the industry. REA are definitely doing the same thing, and with the same level of excitement in using iGuide. There's other propositions out there as well, but I think it is what customers want, and we've had, since we started, more than 12 million unique users that have used our virtual tours. We see the engagement. To Sev's point, over those 12 million, the average session time is more than 4 minutes, but you'll get 5 or 10% of users that are actually spending a couple of hours virtually going through the property when they get really interested. And so no doubt, I think 2026 will look back as one of the years that it really hit its stride, the adoption of virtual tours.
Now, there's a lot in that sort of goes straight to Sev, but I'm going to just hold off on that and go to Matt. So Matt, what were the three? What are your tech trends that you're seeing in the strata space?
Are these tech trends that I'm seeing or I would like to see?
Well, that's up to you. I'm going to let you.
Let's say I would like, and I like the term hyper personalization. I'm going to steal that and be the first one in Strata to talk about that. So thanks, Josh, for that terminology. So,
all about sharing.
All about sharing. Well, speaking of sharing, integration, interoperability is one of the big trends that I hope will continue to grow legs in Strata in 2026. As there's ground being made, as I mentioned before. But I think the issue is that the end consumer doesn't know what's possible. So it's an educational process there in the first instance. And then once you see the light bulbs going off, then the demand starts to grow and people get it and want more. So that's one of the big things that I can see as a trend. The data side of things is also going to become more critical. Now that's from a few different perspectives. It's from an internal business management perspective to help you sharpen everything you do and do a better job there. But it's also really, I think, people outside Strata wanting access to information that only lives in Strata for significant purchasing decisions. So I love the concept of virtual tours and all that kind of stuff like that. But how do I know when I'm buying a house whether the insurances are appropriate, whether the sinking fund has been maintained and things have actually been fixed properly? How do I know a whole lot of things that affect that purchasing decision and the resale value of your property that only really exist in Strata at the moment? And so I can see an extension of that integration, interoperability outside Strata and into real estate as well. So if there's anyone out there who's listening who's keen for a further chat on that, then hit me up. But I think that the silo will be broken down. Obviously, AI is becoming more and more prevalent. But the thing that's happening, though, is that everyone's rushing in and thinking that it's a cure-all for everything that's going on. And we all know with leading-edge technology that that's only half the answer. And so I expect to see a maturing of the understanding of the role that AI can play in Strata, and with that will become quite sensible development in the platforms and utilising AI effectively. And the last one I wanted to talk about was maybe this is the hyper-personalisation version in Strata. So more of a focus on customer-centric design. A lot of technology in the old days wasn't really designed from the customer's perspective. And people, as I mentioned earlier, people got what they got, not what they wanted or needed. And so I can see a growing trend toward provisioning information more effectively through portals. I can see people at the other end being able to access more information more easily, see more transparency, and people taking back the power and ownership of what effectively is their data as well. So that's a trend, and therefore platforms that facilitate that are definitely on the money, and we'll see more of that happening in 2026.
There's such an interesting kind of overlap of all of these things. I think the strata industry is so fascinating because and worth reflecting on in this context, because we have in Strata, you have multi-million-dollar properties with tribal politics. Yep. Because, multi-million-dollar properties requiring extraordinary professionalism in order to, stay valuable, retain their value, but then very localized, tribal politics that are, letterbox by letterbox kind of level, and not necessarily a huge amount of skill in terms of strata committees, not necessarily having a huge amount of education or awareness around what they absolutely need to do, being led by a cottage industry that is replicating property management at huge kind of scale almost, dealing with complexity.
Yeah, I agree with that. And I think we see lots of counterintuitive decision-making happening in strata, very short-term thinking. So let's not get an insurance valuation to check out how much we should be insured for, because that's going to cost us more and we don't want our levies to go up. Okay, that makes a lot of sense. Another example is let's not invest in proactive maintenance, because that's going to cost us more. Our levies will go up. 10 years' time, things are falling apart and I can't wait to sell what I can't sell because of the issues that I've caused. So, someone living in an owner-occupier compared to an investor who lives across the other side of the world have competing interests as well. So we see all those small battles on a building-by-building basis. And I think that the industry would acknowledge that it did start off as a cottage industry, but it's now becoming more and more professionalised, and that includes in New South Wales there's a requirement to provide formal committee training, and I'm sure that will spread across the country. So we'll see more and more of those things emerging in order to ensure that the industry as a whole continues to mature.
Yeah, awesome. But I think you're also dealing with a lot of this similar challenges to what the property management industries, like general property managers, also deal with. So I think there's some bit of overlap there too. Sev, let's go over to you, because all of these things are kind of playing into your space. What were your trends that you're seeing? Like this whole idea, I guess we're seeing two things. We've got more data coming out of strata, more data coming out of virtual, like you were saying before, voice-activated search. What else is an agentic AI as opposed to just LLM AI? What else are you seeing?
Great question. The one I want to start with, Kylie, is you hit the nail on the head. You've talked about data centres and the explosion, and there's an article in the Sydney Morning Herald today, I'm not sure if you've seen it, but it's predicting that at their peak, the data centres currently planned for construction in Sydney would take 4 times as much power as all of Sydney's residential dwellings. So I think that just gives everyone an appreciation of the scale of what's planned in terms of data, not just in PropTech but beyond, but it gives you a very good feel for what's coming our way. In terms of trends overall, so for me, the hyper-personalised discovery experience that we've talked through is going to be a massive trend. The only part I'd add there is, I think traditionally for a long time now, search on portals has been conducted through the search bar. And what we're going to see is a move from the search bar to beyond the search bar. It'll be search bar plus. There'll be a lot of personalised content all the way through to the digital property walkthroughs that we've talked about before. The second part is I think there's a big opportunity and there's a big trend on consumer insights. And traditionally, if we look at the property transaction and who's held the key information, agents have been at a very unique point where they've held quite a lot of information both on the sell side and the buy side, and they've been very key for making transactions happen. Real estate agents have played and will continue to play an incredibly important role in making real estate transactions happen in this country. I've got a very strong belief that is not going to be automated away, at least anytime soon. I think they're absolutely pivotal. However, one of the key trends is buyers are screaming for more insights. It's not just data, but it's data-driven insights that consumers want. And so at Domain, and you see this with some of our competitors in the market as well, we're moving towards giving buyers or giving consumers broadly much more detailed insights into properties and the property buying experience. Now, I actually think that's a net positive for the industry overall, because as soon as you build trust in a transaction, you drive transaction volumes. It removes one of the frictions. And so what I expect to see in 2026 is a move towards greater customer insights, but that effect is going to resonate in subsequent years, where we're going to see increased transaction volumes in some of the outer years as there's going to be much more confidence coming into the market. The point that you also asked about was AI and how AI is going to evolve. And what we've seen is 2025 was very much built around GPTs, or the use of LLMs into products. And we started seeing some green shoots. Some of the examples that I've talked about before, like the voice property search, and it's effectively a conversation where you're talking to AI about the type of property you'd like to purchase. AI is answering and giving you back options, and you could do this in the car, or you could just do it with your laptop open, no fingers on keys needed. And you can find a great property that way through this voice interaction with AI. And so we're starting to see some green shoots there, and by all means, that's going to keep growing. But 2026 is going to be the year where we start seeing some interesting use cases in agentic. And in particular, AI agents that perform objectives across multiple step workflows. Now, where most people go to straight away is cost out, right? They think if we're going to get agents are going to replace humans, and it's going to result in cost out. I have a very different view. I don't think these are a game changer in cost out opportunity. They're a game changer in customer experience opportunities. There's going to be a roadmap, and it's going to take a while, where these solutions are deployed, they're iterated on, and they start improving. There's going to be a human in the loop, which is going to be key. But at the end of the day, we're going to get to much better customer experiences through moving to an agentic world. So I think that's the trend we're going to start seeing some green shoots of in 2026.
So I want to question you on this whole idea that you were talking about on it starts in the search bar. Whose search bar in 2026? Because is it in the REA or the domain search bar, or is it in Google's search bar, where I start saying I want a 4-bedroom home with 2 bathrooms and 2 car spaces in XYZ suburbs for around this price? Where do you see that? Do you see that changing?
Great question, and thank you for asking the tough questions, Carly, because this is one that's been flagged as a big challenge for portals, not just in Australia but globally, especially with Google's stated intentions in terms of being more active in the property search space, and there's a lot of AI giants or other giants, tech giants globally, trying to move into or thinking about moving into how they can serve up some of these listings, but. I'd frame it as, for portals, first of all, standing still for us isn't an option. So we always face varying levels of competition and competitive threats, and that can include AI, and this is just the latest. Over the years and over the last 2 decades, there's been a series of threats competitively to the business model. But one of the core things about domain and portals globally is we've always been able to progress, innovate, and at the end of the day, deliver what matters most, and that's wow our customers. And that's where we want to focus on as well going forward. I'd say AI specifically is both an opportunity and a threat, not just for portals, but for every player in the ecosystem. And so if we accept that, then it's really important to move quickly. So talking through some of the things we're doing at Domain, one of the things we're doing is embedding AI into how we build products, how we operate as a business, and also how we're building our consumer search and engagement experiences. So from Gen AI through to rethinking discovery more broadly, AI is already woven into our current products. And what you'll see is it's going to be more and more deeply embedded into our roadmap. One of the biggest challenges, Kylie, for pure AI search is what happens after the first answer. So property search quickly moves, if you're a property seeker, from a very simple property query into people wanting to explore photos, walkthroughs, past sales, see comps, interact with maps, take measurements, understand solar requirements or what they can do with solar easements and more. They want a deeply immersive experience that's a high trust experience, not just a simple answer which at the moment is what AI platforms are offering. So any AI platform, if it was to compete, would need to go deep on those end-to-end experiences, which is where portals are dominated and are best positioned to respond. It requires highly specialised focus and support of a specific vertical, and AI at the moment is quite general. I'd also add there's some critical underlying factors that strongly position domain and portals globally. And as an example, coming back to data ownership is incredibly important. So we have a wealth of proprietary property data, and that gives us the enviable position when it comes to leveraging that data to build superior user experiences on top of that using AI. So what happens is this becomes much more important in terms of what is the data that you own that's proprietary and how do you activate that to build a better consumer experience.
Yeah. So Josh, you mentioned before that you thought AML was going to actually help the data conversation. Like, can you elaborate on that a little bit more? Because this, like, the anti-money laundering tranche 2 impacting real estate professionals, everyone in the real estate sector pretty much in this year.
Yeah.
It's the biggest piece of legislation we've seen on compliance roll out for a while. You've experienced it in the past with your fintech background.
Yeah, that's right. Yeah.
How do you think that's going to impact the privacy or the data conversation?
Yeah, I think and everyone will have experience of it if they think about it. That, like, having come all my backgrounds in finance and mostly investment and retail banking, and so AML, KYC, and what's the other one? Anyway, have been around for a while in that space. Yeah, and so what is, and there's a suite of amazing products and really cool. What has happened in every industry as it's rolled out has been a 12 to 24 month friction period as they try and embed it, but then it just becomes like just a part of the process. What that allows further down the line, though, is in the same way that you can go and have a Wise account, a Wallex account, something in your main bank, and you've got some other payment, I don't know, light rails credit facility or something. There is a interoperability and a connectedness that can come from those services because you're in trusted environments in each, and because they trust each other, it creates an ecosystem of much better data flow. You think about now when you go and apply for a home loan or anything like that, it's no longer filling in 12 pages of little boxes on how much is your car worth and how much is this worth, and it's now.
I still did that. I still did that the other week.
Yeah. You probably need a different broker, but but now it's much more. I provide in a third-party trusted environment, I provide my, trusted details, and then everything else passes through in the background, and the plumbing is all digital and automated. So I think that definitely, look, the transaction in property is clunky and has way too many humans in the mix. And I, like you, Sev, I 100% believe that there's a role for the human. It's a large, trusted transaction. There's a role for the human. Same arguments I was having 15 years ago in wealth management and investments, when ETFs and everything were coming online. So absolutely humans in that mix, no doubt about it. But we can all stand back and go, geez, it's clunky. You go through a process where you send your same ID documents, which are not even secure, right? You're photocopying them and faxing them and
emailing them,
taking photos of them and emailing them, and to like 5 different people along the property transaction, and no one talks to each other, and there's a lot that can be streamlined once we're all in a trusted environment and know that we can appropriately deal with personal information and customer and client details.
Okay, so you're saying that we're going to see benefits from AML once we get through the pain of it, which will be enabling the data flow around what my property ownership or what that's allow me to do.
Exactly. I see that happening from sale downstream. That'll be the first place that gets automated and streamlined.
Yep.
But it's also pre-sale, right? Like when you think about the search process and whether I'm using buyer's agents in the mix or whether I'm using other technologies in the mix, being able to be in a trusted environment where I'm identified, pre-qualified, maybe there's funding sitting there already, and being able to incorporate that part of the ecosystem together in a fully trusted environment. We've had to have 14-day building and pest and finance clauses and all that sort of stuff, simply because that's the way that our manual, untrusted, we don't know each other system has to flow. I think this allows all of that to be blown out, and the opportunity for, I guess, leaders in the space to really reimagine what the purchase journey looks like.
Yeah. Awesome. Okay. So, and Sev, do you think that this? Well, a question for the panel is the role of agentic AI going to be to actually grease the wheels? Sounds like the wrong analogy, but is it actually going to be to actually make the movement smoother from one section of the data to one section of the transaction to the next? Do you think? Is that going to be one of the roles of agentic AI?
I'm happy to jump in here. I think agentic is going to play many roles. I don't see it replacing the core transaction anytime soon, but anything supporting that, and a lot of the businesses at this stage, it absolutely will support.
Oh, that's all right. I've had one of them. Look, if anyone's got any questions, please prop them into the chat. So, and we'll pull them up from there. One of the things that we have been asked, and one of the questions that I wanted to ask too, was around the economy, what we think that's going to do this year, and especially kind of the, overseas, what's going on overseas in the US, which has always traditionally been such a bit of a leader in the PropTech space. Do we see the power dynamics there changing this year?
I don't want to take up all the airwaves, so I don't know if you want to jump in, Matt, or if...
I don't know too much. I mean, what I do know about our space in the US is that it's quite different. Homeowners associations tend to be massive beasts, and there's not quite the legislation there as we have here. And so, in a way, Australia has exported legislation around the world from a strata perspective: Canada, South Africa, Asia, the Middle East, New Zealand, Singapore. So maybe the trend goes the other way. Maybe as things progress, they might see the need for a little bit more stricter legislation and a little bit more better governance or different sorts of governance. But it's not an area that we're exploring at the moment. But I don't see in our space, I don't see anything coming from the States impacting things in Australia, because the reality is that whilst the strata industry appears big from the inside, from the outside it's not massive. So it kind of sits as a bit of an island, quite separate from what's going on in the States.
But Sev, with CoStar coming on, and you were saying before that, homes.com.au is impacting a lot. What's happening in the US, is that going to impact our bubble in property, or do we?
Yeah, what I'd say is the potential US Commission decoupling would be a significant structural event for the US market. But Australia is fundamentally different, and we're quite insulated. We already have a highly transparent, competitive market. We don't have the MLS model that the US does, and none of the associated fallout would happen here, depending on the pathway over there. What I would say is there is a not short-term but a longer-term opportunity for PropTechs in Australia to target the US market, because if that fallout continues and that decoupling continues, what's going to happen is the US market is going to start shaping up and look a lot more like the Australian market. Competitiveness and transparency is going to increase, and that is where the Australian market's already been for some time. PropTechs here are already tailored to and based around that type of market. And so with that structural shift in the US, there'd be an opportunity for Australian PropTechs in the medium to long term to look at branching over into the US market and meeting some of the new market demand.
Awesome. Josh, what do you think about the situation in the US?
I'm definitely no MLS expert, and I'd usually default to Pete Schrav for questions related to the US market, but what I do understand of it, and certainly with the NAR decision and decoupling of commissions, I think that forces a more open and better connected sort of system in that MLS, in those MLS pipelines. I think the technology and the things that come out of that could serve the Australian market really well. We've got some really nice open pipelines, obviously, for delivery of listings and that sort of stuff, but we don't have the full connectivity that some of those MLSs offer, and upstream and downstream from the transaction. So I think, yes, I think it's possible that some of the innovation out of that move positively benefits the way that the data rails work here in Australia. That's as far as I've got an opinion on it.
No, fair enough. So what about investment though? Because we've always kind of looked to the US in terms of it being a great place to the entrepreneurial investment story. How hard or easy do you think finding investment is going to be for PropTechs in 2026? You guys raising at the moment, Josh?
We are. Well, we will be soon. That's just, I wasn't expecting that question, but
Sorry.
We'll be soon. Look, it's definitely there's headwinds in that space. So we've come out of a number of years ago, very, very low interest rates, and the hunt for yield globally was very strong. And so having established and growing businesses in a well supported and known space like property was popular. It was really good to raise capital. That no longer exists. There's yield everywhere now. You got private credit funds, underwritten by A-grade developments that are 10 to 15%. I won't say risk free, but certainly time constrained. That reduces a lot of the risk out of it. There's a lot of opportunity in our ASX and NASDAQ and all those are going really strong and providing great returns. And so it's very, so there's a lot of other really good, well-established investment opportunities for people to put their money into. But then that's coupled with, exactly as you're saying at the start, and with all these great new proptechs that are solving problems, like genuine good problems, but there's an absolute proliferation of the number of proptechs that are competing for whatever small amount of funds are left. I think what that means is that, if you've basically got two angles. You're either a highly profitable and can draw really clear lines from investment into a return on that investment. We've got our economies set up so every $100 you put in, we make 150 or something, and you can show that and prove it. Or you're super strategically valuable to a large incumbent, whether that be through proprietary data sets or a technology that they need to unlock or a new channel, and you get probably bought out or certainly invested in with other little strings attached by the big guys who need that strategic leg up. I think that's sort of where the market's going now. If you're pre-profit, certainly if you're pre-rev and you're trying to sell off a PowerPoint, the days for that have probably gone.
Yeah, right. So what's Domain's appetite now? Are you still going to be looking for acquisitions or investments in 2026?
So I think if I look at the market generally, I think 2026 is going to be an up market versus what we've seen over the last couple of years where transaction volumes have been lower. Generally at Domain, we're always open to partnering with industry. So in terms of, are there partnership opportunities that we'd be looking to explore over the short, medium and long term? And the answer is yes, absolutely, that continues. At the same time, given we've got a very well-capitalised US parent company now with its own organic product roadmap, one of the parts that we're looking at leveraging in the short term is the products on that roadmap, and they're really exciting. So Matterport, of course, we've already mentioned that. CoStar also completed the acquisition of Matterport last year. But a lot of the organic products that are being developed, so for example, some of the AI search experiences that you can see on homes.com, at some point will be rolled out in Australia.
Awesome. And so we've talked about that Strata obviously is a growth area. We've talked about that AI search is a growth area, and we've also talked about the fact that the virtual's been around for, there's this sort of a 15-year lag to get adoption for some of these things. But what is the tech that you, apart from, if you were doing a startup right now, what are the problems that you think really need still to be solved in residential real estate? Now, this is a question that I didn't put in the pre-reading, so this is a question without notice for the panel.
I'm happy to jump on it and take that first, and then others want to pitch in.
Give everyone some thinking time. Thanks, Sev.
So let me start by coming from the value angle. Right, most proptechs, the end result is trying to really drive value for the company, but a lot of that comes through value to the customer. And so whatever it is you're looking at building at any time through the technology cycle, what's really important is understanding what do customers want most, whether those customers are individual property buyers or whether they're real estate agents or someone else in the broader property ecosystem. So what is it that they value most? What's critical to them? What is it that they want? So understanding the jobs to be done, and then thinking through what the niche would be that you're able to offer relative to the competitive dynamics in the industry and who else is offering, a similar product or service. And I think regardless of whether it's 2026 or 2025 or what the broader market's looking like, it's incredibly important to meet those parameters. And if you do, you will be highly successful. Now, having worked with a lot of proptechs over the years, I think one of the parts that becomes really important is some proptechs get it right the first time, but I'd say that is the minority, not the majority. And so it becomes really important to have a good hypothesis, test that product market fit, and then iterate fast. And if you do that and do that well, you'll be able to come up with a good product or service that is really core to what people in the industry want and are happy to pay for. And I think you'll generate a lot of value.
How important, though, because some of the things we've talked about today are about that forward vision. If you ask real estate agents what they all want listings. But, we've just gone through we're in the middle of a property selling journey, and Mark and I went to about 4 or 5 actual auctions and open for inspections, and not a single agent, well, only 1 out of the 5 agents actually asked for our details as we went into the open home, because they're all expecting their leads to come in digitally now, and some of those old skills are lost. So if you ask an agent what they want listings. If you ask them what they want AI to do, they want them to, manage the quality of those listings but actually maybe listings aren't necessarily the problem that needs solving. Maybe it's behaviour, which isn't necessarily something that they want to solve. So how do we drive that behavioural change? I mean, Matt, you'd be seeing this a lot in Strata too, where, like you were talking about before, where you've got Strata groups or Strata committees deciding not to take up insurance or to reduce their insurance, and then causing problems for themselves, 10 years down or make repairs and cause problems 10 years down the track. What do we need to do to manage the behaviour better or differently?
The obvious thing to say is, to leverage the fear of what might go wrong, but that's not working because it's not working. I think to change the behaviour, I don't really know whether you can. I think what you can do, though, is you can change what you're serving up to people and how you're serving it up to people. And by exposing people to a problem in a different way is often a good way of raising it to the surface. So people building a niche product that that addresses those problems that are there is one thing, but getting it to the end consumer is another thing. And there's a bit of, I'm kind of joining a few dots here. in Strata, whilst it's good that there's more people coming in to the industry and providing deep and thorough solutions, there's also a little bit of change fatigue from it's another thing, it's another platform, it's another implementation and onboarding I have to do and another license I have to maintain. So I think the way to think about it is to not only think about the problem that you're solving, but the best way to present that to the market. And if that's through a channel to market, then that's the way to go. I think one of the problems that gets in the way of entrepreneurs, and maybe it's just an inbuilt part of how we think, is the ego sort of thing. And, I have to have visibility of my product, and I have to, have it on the wall somewhere and run it as a standalone. And I want to drive a massive wedge through the market and create this huge niche for myself. But maybe that's not the only way to think about it. Maybe it's to look at the players in the market already who might offer a complementary or an aligned or a next part of the workflow service, and work together with that existing and well-known and reputable brand. So, I think solving problems is one thing, but getting it to the people and packaging it in a way in which they are happy to receive is another part of the challenge people are going to have to think about.
Yeah, framing
it reminds me, Matt, of an old adage, which is first-time founders obsess about product, second-time founders obsess about distribution.
Yeah.
Which is so true. And I think just picking up on the customer thing, though, I think that's probably actually like designing something and creating great customer experiences, I think is the mistake actually that most PropTechs make. And the reason that's a big mistake in PropTech is because the customers are not the decision makers. They're not the ones that pay. They have basically a free ride through the entire, and all of the incentives and the mechanisms for payment are actually lined up into gatekeepers, not into the consumer. So it doesn't matter if I create the world's best digital customer experience or whatever as a PropTech that they want. A great example is virtual tours. I can rattle off stats all day about the engagement on virtual tours and how much people want them and use them and how much it impacts positively buyer behavior. It doesn't matter if they're not paying for it. And if it's actually the vendor that's paying for it, and it's also the agent in between that needs to decide whether they're even asking the vendor to pay for it, and it's all this other stuff that's mixed up. So I think it's actually like trying. You've almost got my advice to founders or people starting, PropTechs or any techs is you've got to find the problems of the people who are paying the bills, who are the ones who are actually like transacting. They're the ones who can sub out or improve or have some benefit that they get from implementing your new technology or the solution that you've created. If I was to pick just one, though, I think 2026, you'd be crazy not to be developing a really well integrated AML solution. I'd say that streamlines just a smidge of the upstream and downstream process flow for clients. There's a lot of confusion out there. They have to buy it and pay for it. There's, it's a compliance thing. That's when money gets made, is when there's those big flows through the economy and market and shifts in the sand, and people can come in with a really great solution for it.
Yeah, and look, we are seeing, there has been a flurry of new AML PropTech out there, and a lot of them are integrating into existing PropTech. So big shout out to all those AML PropTechs out there. I think for my money too, because like this is sort of taking a bit of a fascinating turn, because if you apply what Sev was saying and then what you were saying too, Josh, and Matt, why did the portals do well? Because they offered an alternative to the expense of newspaper advertising, which is what, to your point. But then now, why do they hold that position? To Sev's point, is that because consumers actually get so much value out of being able to go to one place to find everything, and so yes, it is. There's kind of different periods and points in time when the different dynamics, and that goes back to what you were saying before, Josh, too, is that are you focused on your product and your P&L and for every $100 we get 50, or are you actually trying to really radically transform and disrupt the way we've always done things, in which case you're looking for funding to pay for that vision until such time as you can monetize it, right? So everybody's telling the truth. It's just sort of which lens you're going to go through. But I think if I had my money down for PropTechs that I'd be looking to be setting up, anything around compliance, because that's where that's where people have got to be spending, but also anything that is extracting data from or joining up the dots between the disparate data sets that sit across the entire ecosystem, from planning to and how we're handing off. But guys, look, I'm really conscious of the time. We're about to hit our 2:00 mark. This has been a fantastic conversation. Thank you so much, Josh Callaghan, Matt Larwood, and Sev Thompson, for your time. We're looking forward to a fabulous year at Proptech Australia. And if anyone's got any other questions that you want to follow up with, hit us up on LinkedIn or through the website, and we will connect you up with any of the guys on the panel. Just a reminder, we've got a couple of we will be shortly announcing at Proptech Australia the Proptech Awards. They're coming up for 2026. Looking forward to some great entries coming through. That's always a great way to learn about new PropTechs. We have the PropTech map coming out, and I think I've just learned about 5 new PropTechs that I need to make sure the guys have included for as part of today. And 12th of March, if you are a woman in PropTech, we would love to see you at the Proptech Women in PropTech lunch. We are in the process of organising that. Stay tuned for details. And we also have the forum coming up in November. So thank you, everyone. Thanks, Matt, Josh, Sev. Great conversation. Looking forward to seeing you when we all catch up on February 3 for the PropTech board meeting. Thanks, guys.
Thanks, everyone.
Thanks.
Yeah.